AJ Brown Show, where we talk about all things investing, options trading, and the like. Now, here's your host, AJ, whose primary mission in life is to help you become a better investor.
All right, ladies and gentlemen, welcome back to another episode of the AJ Brown Show. My name is Cyprian Francis, and with me, as always, Mr. AJ Brown. We're just feeling the red all day, all week. What do you? Good morning, AJ. Is it a good week? We were talking about when does market get a pullback for months now, and seems like we finally got it.
Yeah, the market is basically doing what we said it would do for the last months. And it's finally just fulfilling kind of what we were talking about. Now, the next thing that I guess we're looking for here at Trading Trainer is we're looking for where does it bottom? Because that's going to tell us a lot about what's happening next. But, this week's selling SIP really started off on Monday. We got our retail sales numbers and they were hot. I mean, they were not only hot compared to what was expected, they revised February's numbers. And that just, this hotness immediately, if we take a look really quick, I'm sharing my screen, Sip. Before I even look at the charts, take a look at the expectation for rate drops. So last week when we looked at this, we already knew that May was a non-starter, but now June's a non-starter. So nobody expects any rate drops May or June, maybe July, but even in that case, it looks like the majority of folks say that we're going to go through the summer without a rate drop. It looks like September is when folks are expecting probably the first rate drop, maybe July, September, but leaning towards September, and then maybe not another one till December. Remember, it wasn't that long ago, maybe 2 months, 3 months ago, that investors were expecting a whole rate drop by the end of 2024. And then it got revised down. Even as little as last week, people were expecting still a 3/4 point rate drop. Now it looks like investors are going to be satisfied with a 0.5 point rate, or not satisfied, but that's their expectation, is that there's only going to be 2 rate drops this year. And it's not going to happen till maybe the end of the summer or even beginning of the fall.
And it's wild to think about the entire run up towards the end of last year was this expectation of the rate cuts coming the following year, and now we're getting the data to say, hey, that's probably not going to happen. And when we look at the S&P chart, are we pulling, like, we've looked at the levels of support, it looks like we just broke 5,000. What is that? What is the storyline there?
Well, and a lot of money this week flowed to the higher paying bonds, right? Bonds interest rates have been going higher. So money's been going that way, coming out of the equities market. Gold has been stable. So we've seen a lot of hedging into gold, but for the last week, gold has been stable. So really, it's a big movement of money into the bond market. I mean, if you're guaranteed high interest rates, why would you put your money at risk? So, take a look over here. If I throw in on my drawing here of the S&P, I've got my little retracement analysis that I like to do. A lot of people are asking me, they're like, AJ, and I'm speaking specifically of kind of the program participants that meet with me weekly in my workshops. They say, AJ, when I look inside your website, you still say you're neutral to bullish. And why is that? Well, because I like to measure things a couple of different ways, using lagging indicators. And I don't like to, cut things off just by the tip of my nose. If you look at where we've pulled back, I've got it highlighted by this magenta zone. This is actually an ideal pullback to actually kick off moving higher, right? This is, if we reverse in this magenta zone that we just entered and head back higher, swing traders are going to be like totally stoked, right? This is going to be an ideal kind of what we call a range contraction move for then a kick up higher. right? I also have these other zones identified. This red zone that comes next is actually where I have kind of uh, extrapolated where we might reverse. And this would actually mean we're in for some sideways choppy motion, maybe for the rest of 2024, maybe even a little bit into 2025. Who knows with the way that the market's going? And also, we've got some, pretty big things happening next fall with, deciding which way the US wants to go politically and things like that. So that can always throw a wrench in things, at least temporarily. But I'm actually seeing possibly that we'll dip down below this magenta zone into the red zone. That would be a premium seller, an option premium seller. What I specialize in, that would be our like best idea of the future. So I'm keeping an eye on that. Maybe I'm biased, but I think that based on some of the data I'm looking at, that might be where we reverse. And of course, if we go even further and start going into this green zone down here, and maybe the green is the wrong color, that's the zone we've identified where, hey, we're definitely in a downtrend kind of vibes. Trend reversal traders would be stoked for that, folks who like to trade and short the markets and stuff. But that would pretty much mean that the Fed has been too slow to drop rates and we drop into a recession. So any of those things are possible. We're waiting to see where we get a nice confirmed reversal on our way up to kind of give us some ideas of at least what's going to happen in the midterm, if not long term, with our trading strategies. So that's kind of the chart technical perspective on things.
Yeah, and even if we get down to that like 4,200, that's not too far off of where we were like last year in terms of a run up. And so I think you're right with we may have found a top there and we're going to have some sideways chop for a couple of
I would love that. Us
weeks.
premium sellers.
Exactly.
We have when other people are non-committal, when directional traders are questioning their logic in the short term, us premium sellers are pulling income out of the market left or right, right? With option strategies, we can totally put ourselves on the correct side of these transactions. Remember, as much as the talking heads like to tell us that money is created or destroyed in the markets, money simply changes hands. And the trick is putting yourself on the correct side of the equation in these transactions so that the money's flowing your way instead of away from you. And so premium sellers, we love the sideways chop. We love it when directional traders are questioning, their purpose in life.
Without a doubt. And with that, if any new viewers are watching or anybody tuning into the AJ Brown Show for the first time, we've got a great daily workshop where AJ breaks down some of these premium selling strategies in 4 simple examples or styles of premium selling. And so the link to that is in the chat. So if you haven't checked it out, head on over there and grab it. We do have a full show today, so we might not dig into as much of the data, economic data. Like it was a pretty light week on that front in the sense that most of the drive to the downside seemed technical. Like there wasn't like a big catalyst, was there?
I mean, besides the retail sales, there's been kind of some sour news around housing starts and permits that I like to. That's more of a long-term situation here. We don't have enough housing for folks, and I'd like to see those numbers higher than what they came in at. But yeah, there's just been a lot of negative sentiment about, kind of global conflicts and just the sell-off in general. People are hedging and they're bummed about the fact that interest rates probably won't go down as much as expected and as early as expected. The economy is just hot. It's one of those things where good news is being interpreted as bad news by the market investors, equity investors.
And so now, so let's cover a couple of the names that we talked about last week, because I think that the continued sell-off really accelerated those positions, right? Let's start with the VIX, because that was kind of like a
that
was a big mover, and you had a really solid call on that. And even today, it looks like the follow through is extending.
Well, I kept my positions in force and they're expiring today. So my positions are expiring totally in the money, right? My credit spread is expiring worthless, which is what I wanted it to do. And my debit spread is, this is one of my most profitable trades of the year. I mean, we're talking about a six-figure return for me this year. So I am very stoked. All I needed to do on today's close is see the VIX above 17. And as you can see, the VIX has been close to this all-time mean. This dotted line that you see here is the all-time mean of the VIX. And the VIX, a measurement of implied volatility, more accurately, the VIX measures how much fear or confidence is in the market. So when the VIX is down, we know that investors are on the confidence side. When the VIX starts to move up, we know that investors are on the fear side. And what's interesting, if we look at the all-time of the VIX, it's a really cool study of just human psychology, right? You'll notice that if I look at since the VIX was created in 1985, that or I guess since this chart goes back, you'll see that we really max out as a human kind of tribe think, at least in the markets. This is like psychology 101. We really max out at confidence. Like we only get so confident, Sip. But when fear takes over and anxiety starts to increase in us as a species, check it out. Our fear goes unfettered, whether it's the 1987 kind of, tax structure thing or the SNL crisis or the dot-com bust or the 2008 crisis or the pandemic. Our fear shoots up exponentially greater than our confidence ever gets. So that's just a really neat kind of study. But you'll also notice that no matter what, we always revert back to the mean. That's something about implied volatility. We have this mean reversion. Whereas, with the equities, if you look at the indexes, the ETFs, the stocks, they typically, go from the lower left to the upper right. They're always increasing over time, at least in the long term. But the volatility tends to find a average or a mean that it goes up and down to. So if I come back to our 6-month, you'll see that we are reverting back from this moment of high confidence. We're now starting to introduce a little bit of uncertainty, a little bit of confusion, a little bit of fear back into the market. We're back up at this mean. And I set up those trades that are based on the fact that we probably will only get so confident, but their fear is typically, can go to proverbially infinity. And that's what happened. And that's why this is one of the most profitable trades. So I'm really stoked about what the VIX is doing right now.
Yeah. And we called the bottom, almost pretty much called the bottom on that one.
We totally did.
The second name that is time sensitive was United Airlines. This was a volatility crush play.
Yeah, but look at what happened. So this was going to be an earnings play, folks. And there's different ways you can trade earnings. And one of my favorite ways is called a calendar or a horizontal spread. And that's exactly what I did, except for horizontal calendar spreads work best when there's little or no price action and there's just a volatility crush. There was still a volatility crush in United Airlines, but because their earnings, impressed investors, they drove up price almost immediately, and I couldn't get out fast enough, and I wound up, I went in with a horizontal or calendar spread with the back month option being a September monthly expiration and the front month option being the April 26th. So not today, but next week's expiration. And I purchased those things for $3.01. It was a debit spread. So I purchased these things for $3.01 the day right before aftermarket earnings. And then, gosh, price action started to shoot up the next morning. I did get my volatility crush because price action shot up, I got out at $2.90. So I actually suffered a little bit of loss. And this shows the weakness of using a calendar spread for an earnings play. The weakness is, and I should have used a straddle or strangle. The weakness is that if there's any appreciable price action, the position, it still does what it's supposed to do, but the price action trumps the volatility crush. So something to keep our investors aware of.
Yeah, and that's just full transparency there, right? There's
Yeah.
some winners, there's some losers, but at the end of the day, the risk is managed from the
Yep.
very beginning, and so going into the position, AJ knows what the risk is, and
I took a 3% bath on that one, which is not bad.
that happens. All right,
Mhm.
last name to review: Norwegian Cruise Line, ticker symbol NCLH.
Yep. So this one I am just super happy about. I got a signal last night, an end of day signal. And so today I'm getting my follow through. I'm making sure that I get my follow through. I'll probably be watching this after this show is over because I usually come in the afternoon session and trade this guy. This is where I would be selling my put premium and buying protective calls. But one thing I want for folks that are either doing this trade with me or folks that are following this trade, in addition to making sure our signal is confirmed with actual trading day follow through, it's important that we also make sure our price targets are either met or beaten. So I'll be looking at my price targets, what I expect to make when I sell my premium and what I expect to pay when I buy my protective options. And if I can't meet those prices, then now's not the time to do the trade. Now's the time to just chill. So in addition to making sure your signal is a good signal, always make sure you meet your price targets to stay within your risk models, right?
Awesome. So nice little recap of some of the positions that we've been looking at over the past maybe like 2 weeks or so. Not even that long of a time frame. All right, cool. We'll keep the party going. We've got a special guest on.
Yeah, we
today's
do.
Episode where we're gonna try and transition the conversation from premium selling to kind of a new options concept that we haven't really discussed much on the show. I'm not really that familiar with.
It's a really nice long-term plan. So I really like this kind of thought process.
Oh, before we move on to that, I saw a tweet that I thought was pretty cool to kind of sum up today. It's the bulls praying to the bear god there.
Well, the bulls climb up the stairs, the bears jump out the window.
And I'm a big Bears fan, right? Big Bears fan.
Oh.
It goes both ways. All right, guys, we're going to take a bit of a break. We'll bring on our special guest, and we'll talk about long-term options. Sit tight.
Love it. I get it. You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
All right, folks, without further ado, let's go ahead and bring on our special guest for today, and that is Mr. Jeffrey Weber from JJJ Investing. How are you doing, Jeff?
I'm doing fine. Thank you for having me on your show.
One of the best newsletters, folks.
And so, Jeff, we were just talking about some options trading strategies. Did any of that bring to light the things that you've been working on, or what you do with your community?
Yes, and one reason I'm thrilled to be offering an AIM investing program is it eliminates the biggest enemy all investors face when investing, and that is letting emotion make their decisions rather than logic. Because AIM is the only method of investing I know of that not only tells you exactly when to buy or sell, but it tells you how much to buy or sell. So the investor just basically places a limit buy and sell order following my instructions. And basically, it works like this. If you bought an option for $100, okay, I would tell you, I want you to sell about 20% of your options if the price drops 25%. So you would place a limit sell at $75 for some of those options, roughly 20%, 25% of what you own. And on the same side, I would have you put in a buy, and I found from years of experience, put your buy in 35% higher. So if you bought the options at $10, you'd have a buy for 4 or 5 at $75, and you'd have a sell for roughly $135 if you bought it at 100. And then you just sit and wait. And the beauty of it is, let me just explain. I do it all with what are known as leaps. And all leaps is a fancy term for an option that will expire the third Friday in a January and has more than 1 year before it expires. There's only roughly 500 leaps available right now. And to show you how negligent the industry is, I have to compile my own list of 2026 leaps because the Chicago Board of Equity stopped doing it, and nobody publishes a list of all of the leaps. And the other amazing fact is there's leaps not only on stocks, but there's probably 30 or 40 ETFs that have leaps. So you could buy a leap on SPY, you could buy a leap on TQQQ, so you could actually buy leaps on indexes. And here's the reason I love leaps. The two magic words for leaps are volatility and leverage. Give you an example. If you wanted to buy 100 shares of, say, Apple, it might cost you $10,000. But you could buy one leap contract at the money, which is the same price that the stock is selling for about 25% of that cost. So to buy one contract would only cost you $25,000, not the $100,000. Plus, any given day when the stock goes up 2%, the leap goes up 8 or 10%. For whatever reason, and I don't know why, leaps go up at a much higher rate than the stock they represent. So, and the beauty of AIM investing too is you're always in the market. And like AJ and Cyprian were talking about, let's say we're in bearish times. Well, guess what? My AIM investing method works perfectly fine with puts. So you could buy a put and it will go up while the stock is going down. So I've added a page of puts to my newsletter, which I've published for over 30 years. And so be glad to send you a free copy of my newsletter and my free investing book explaining AIM. But AIM is a very simple way to invest that only involves arithmetic. You don't even have to know any Greeks to do AIM. If you can add, subtract, multiply, and divide, you can do AIM. You do all the work on a 13-column paper spreadsheet, because I'm from the old school. I grew up without computers. I'm not confident with them yet. But I can update a spreadsheet in 5 minutes. And the beauty of AIM is every time you have a buy or sell, the way I do it with the spreadsheet is this. I create a spreadsheet for your initial buy. Then down at the bottom of the spreadsheet, I place your next buy and your next sell. I tell you exactly how many to buy and exactly how many to sell. And I tell you at what price to put them in at. And the beauty of it is the stockbrokers offer this wonderful invention called a limit order, which lets you get the price you want to. And I have found from experience, about 10% of the time, you get a lower buy price than you were hoping for and a higher sell price that you were hoping for, because you're not limited on the good side with a limit order. It's just prevents you from buying or selling at a price you didn't want. So there's just a lot to be said for it. And it keeps you in the market at all times. I've had a guy, I had one, and does it work? Well, guess what? I've been back testing it for over 20 years. I have made people sitting in my sunroom with no shoes and no shirt, not like your typical financial advisor. I've made people over $10 million with it. I made one guy in 2020, the year of COVID. He started with 550,000. At the end of 2020, he had 1,750,000. I had another guy in that same time period. He started with Apple Leaps, had 111,000 in January. By August, 8 months later, he had 386,000. And every one of them was, known, established, and I, updated his spreadsheets. I had one guy, he started the morning with American Express Leaps at $3.50. By the end of the day, because they had a wonderful quarterly earnings statement, his Leap went from $3.50 to $12.50 in one day.
Jeff, give us a little history lesson on AIM.
Okay. AIM was invented by a wonderful gentleman named Robert Lucillo in the 1970s. He wasn't just an investing man. He wrote many different books on many different topics, but he came up with this method of using it. And the way, in essence, he came up with the magic ingredient that all investing methods should use. The secret of AIM, he found, was to have, let's say you started with 25,000 worth of Leaps. He would have another column called portfolio control that would start with 25,000. So let's say, for example, your Leap doubled the next month or next day or whatever time period you're looking at. You would look at your Leaps value and you see it's gone from 25 to 50,000. Well, you compare the Leaps value to the portfolio control and you would say, what is higher? 50,000 Leaps value or 25,000 portfolio control. So since the Leaps value is higher, you think you put the Leaps value on top, 50,000, subtract 25,000 from it, and AIM is telling you you have a market, a possible sell of 25,000. Now, one of his great features to make you even more profits, he included a feature called SAFE. So SAFE is always 10% the value of your portfolio. So doing the math I just told you, you'd go 50,000 minus 25,000, 25,000 possible sell. Then you would go minus 5,000 SAFE, and you would get a market order sell for 20,000. So you're holding back that 5,000 because hopefully the trend will continue and you'll sell it later on. And I can tell you numerous times I've seen the second sell was much higher than the first sell. So the beauty of this is it always is keeping you in the market. You never want to be out of the market. And the other great feature is Lucillo set it up. So if you're going to start with 100,000 on a Leap, you want to start with 50,000 cash, 50,000 Leaps. You always want to have money to buy when it goes down. And I have a strategy that I improved on. Lucillo didn't come up with this one. What I do, I'll give it to you quickly. Let's say you bought a Leap at $10. Your first buy is $7.50. Your second buy would be at $5. You make that buy. Your 10,000 cash has gone to 6,000. Okay, you still have 6,000 cash, and your Leap is worth 50% what you paid for it. Okay, at this point, I invoke my bear buy strategy. What is the difference? I say, your next buy is going to be 50% lower because Leaps are this volatile, believe me. So your next buy is going to go from 5 to 250, and you're only going to use 1/3 of your remaining cash. By only using 1/3 of your remaining cash, your cash can never go to zero. So 1/3 of 6,000 is 2,000. So you'd buy 8. Okay, let's say it happens again. Okay, you get the buy at 250. Your LEAP is down 75%. Well, now I'm going to invoke my super bear buy strategy. What's the difference? I'm still only going to use 1/3 of the remaining cash, but I'm not going to go down 50%, which would be 250 to 125. I'm going to say you're going to buy at $1. Okay, so now you're buying at 90%. What's 1/3 of 4,000? 1,333. So you would buy 13 more contracts. All AIM is a sophisticated dollar cost averaging system that involves buying and selling. All the other guys just want you to do buying. They never want you to do any selling, which is ridiculous to me because you never make a profit if you don't sell something. So, and even if you bought it at the dollar, you would still have 2,700 cash left from your original 10,000. You could make another buy at 50 cents or something if you wanted to, and they do turn around. Now, there's actually a feature, I'm sure you know about this, but maybe your viewers don't. You can go to Yahoo Finance and click on what I call the LEAP slices played in the option chain, and you can actually see the daily price activity of any LEAP. It's just an amazing feature. And I would say roughly 100% of the time, I see at least a 50%. When I look at the 26 options for LEAPs, they've been out roughly 6 months. I see a 50% price move all the time in that 6 months.
So that's where you mentioned you're using LEAPs that are over a year out. So you're focusing on 2026 these days.
Yes, the January 16th, 2026. And the other beauty of it is if you're doing, regular AIM with LEAPs, you can own the LEAP forever because the 27 LEAPs will come out the middle of September, and I roll them over from 26s to 27s for my investors.
Nice.
Give you an idea of how they can work. Even though Apple's had some rough times lately, if you look at Apple for the last 18 years, like I've had it in my newsletter, 74,000 has grown to 16 million on Apple, just checking the price arbitrarily once a month.
Nice.
So AJ,
it truly works, Now there's rough patches, but I have a put strategy. You can always mix calls and puts together on certain stocks.
Now, Lacello focused, if I remember correctly, he focused on just the stocks themselves.
Yes,
because you're the one who kind of decided that you wanted to use the leverage and the volatility of the LEAPs, right?
LEAPs hadn't been invented when he first devised AIM in the 1970s. I believe LEAPs are only been around about 20 years or so. And so I just happened to go to a free seminar and learned about LEAPs, and I put the two together and said LEAPs are the absolute, because I had numerous people come up to me and say, Jeff, I love this AIM investing strategy, but I never get any buys or sells with stocks because they don't move enough, and they were right, So I tell people, I said, to me, options have a very bad reputation in the investing world. Established financial advisors will tell you, it's death and destruction if you buy one, and they go, oh, 90% of them expire worthless. Well, they only expire worthless because greedy people are because sellers of covered calls are making a fortune selling this to speculators who want to, think I'm going to make $1 million next week or next month on these options. Oh no, they expired worthless.
Yes, they are, aren't they?
I have never had an option expire because I roll them over for my investors and myself when they have more than a year to go. So time decay doesn't even affect them.
What do you publish in your newsletter? Can you give guys?
Yes, I have 7. I publish 7 model portfolios showing people, how they're doing. I publish books. I've written several books. I've, put those in the newsletter for sale. I put in an AIM article every month on how to do a little better job with AIM.
Nice.
I have a book review every month. I try and find a good book on options or something like that. I give a list of options I like. And I also have another method that's worked very well. I invented a year ago called Lean AIM. All that it's the simplest way to invest in the world. Because to do regular AIM correctly, I have found you need to buy a minimum of 15 contracts. So let's say you buy, to buy 15 contracts of Microsoft with the equal amount of cash would cost you about $250,000. So not everybody has $250,000. I have a few that do. Well, here's what I told them. I said, and I'll give you the example with Tesla. It was a perfect example. With Lean AIM, I had a guy buy one contract on Tesla for $5,000. With Lean AIM, all you do once you buy it, you immediately put in a limit sell for 25% higher, which was $6,500. My guy got that sell within a month. I have a binder in my sunroom here with over 300 sells in the last year, with over 300,000 in profits from sells that occurred on an average within a month of buying the initial leap. And I vary my strategy. Like I had one guy buy regular AIM at 15 Microsoft at $59. 2 weeks later, it was $90. I told him, put in a limit sell and sell them all. We'll buy them back tomorrow and go back to regular AIM. So he made a quick 21,000 in 2 weeks, and boom, he's back owning it again. So I have many strategies.
I have to say, I've been checking out your newsletter for a while now, and I thoroughly enjoy every time it hits my inbox.
Oh, thank you.
Yeah.
I appreciate that.
I
do it all myself, believe me.
Well, I think it is, high level stuff that everybody should get a hold of. Hey, do you have any candidates that you would love to share with our program today?
Yes. My cardinal rule of investing is buy at or near the 52-week low.
Okay.
And I have 2 excellent candidates right now that are being badmouthed by the majority of investors in the world, and that's Boeing and Tesla. Because to me, both of them are unique companies. The US government alone won't let Tesla go under, or the whole EV market goes under, And who else is going to start building jet planes besides Boeing? And more people want to fly. So I tell people right now, I already saw Boeing go from 32 to 360 at the end of the financial meltdown. It'll do it again, So I'm telling people, and here's the other trick. Let's say the leap I like on Boeing might be $30 right now, or $3,000 a contract. Well, guess what? You don't have to buy it at 30. You could put in a limit buy at 25 and see if it hits, and then start doing AIM at that point. Though I still think it's a good time to buy it.
In fact,
and I love indexes, so I would tell everybody I like TQQQ, which is a play on the NASDAQ 100 technology industry. And
awesome.
SPY has done well for my investors too.
And real quick question. So AJ, when you're looking at the options chain, right? You went all the way out to
2026.
But in order for you to buy that option, someone has to write it, right? Right. And so, AJ,
it's an instantaneous transfer.
But if there's not enough supply there, right? Like that has a great factor into what's available, right?
Well, what can happen? Go ahead, Jim.
I'm buying and say me and my investors are buying in such small quantities, I would say 100% of the time, the order is filled within a couple seconds.
Yeah, and you're doing, if somebody's willing, he sets his price SIP. So if somebody's willing to write it or sell it at that price, I mean, it's a done deal.
It's a done deal.
So you don't have to wait for them to initiate the price. You're setting the price.
You
Most
put
of the time-
you put your hand up and you're like, I'm willing to pay this. And if somebody wants to take you up on that deal, then go ahead, right?
But you're saying an option that doesn't take effect until 2026.
Right.
Yep. There's, as you can see here, there's lots of liquidity on this option.
Right.
I'm looking at
And
the
I would
January
say,
16th, 2026. There's
like
call, there's put.
Right. 95% of the time, I'm just telling my investors to buy it at market.
Yep.
In other words, I go by the theory, because there's nothing harder than to try and find the exact price of an option at any moment during the trading day. So I tell people, I said, if the bid is $1.10 and the ask is $1.20, I'm thinking you're going to buy it for around $1.15. And I would say on average, the person buying it buys it at like $1.18 or so, maybe a couple cents higher than the intrinsic middle price. So it's no big deal. It's never been a big deal. Now if I see something with a bid of 6 and an ask of 14, I think I'd tell them to put in a limit buy price, get the price they want.
And a lot of our viewers are actually familiar with the way to purchase, using cash secured puts. So there's another option if you want to do the AIM with the stock. If you wanted to purchase the stock at a low price, you could do that too.
Yeah.
Cool.
All right, Jeff.
But
Well,
options, like I said, are the best way to go because they make you much more profits and they're much cheaper to buy in the first place.
Yeah, like
And
for instance, the example that Jeff was talking about on Boeing's trading at $171, whereas the leap that he's talking about is probably around the $35 to $38
There
range.
you go.
So that just makes
less
sense.
than 25% the cost of the stock.
So there you
Plus
go.
it's going to go up. I wish I could look at the leaps for 10 years from 2009 to 19. I bet if the stock was up 1,000%, I'm willing to bet the leap was up at least 8,000% in those 10 years.
Well, and you were talking to us before the show started about some of the trades you suggested on your newsletter over the last 10 years on Crocs.
Right. Now, Crocs is living proof it's very hard to kill a stock.
Even with bad fashion sense.
Because Crocs the first year, but here's the value of compounding. The first year I owned Crocs, it went from $10 to $71 a share in, I forget what period of time that was, but it went crazy. Well, the portfolio went from 10,000 to 24,000 in 1 year. The very next year, Crocs went from 71 to $1. And I followed it the first time it's in my first book. I guarantee you will buy low, sell high, and make money. And I stopped after 5 years of following Crocs. And in 5 years, Crocs had gone from 10,000 to 350,000 because it recovered within the first 5 years. Then many years later, I got curious. I said, I wonder if Crocs went bankrupt or what, because I know they had a rough time of it at the end of the second year. And I looked them up and I found not only hadn't they not gone bankrupt, they were selling for $101 a share many years later. I go, so think if you're buying 10, 12, 15,000 shares at $2, $1, what kind of profits are you going to have many years later when it's $101, those shares you bought for $1? Because I kept compounding everything back into the stock. Not once, but twice, because I didn't use my bear buy strategy then. I used the deep pocket strategy that had all the money in the world. Twice your cash went negative more than 250,000.
Mm.
But at the end of 15 years, you had your stock had grown from 5,000 to 770,000, but your cash had grown from 5,000 to 900,000. Your cash is always going to finish higher with AIM than your leaps because you're constantly selling the leaps and turning them into cash. So there's nothing. I did the same thing with AMD. Wasn't quite as good, but in 15 years, AMD went from 10,000 to 450,000. I don't have time to do the other ones because, believe me, it's monotonous to do 15 years of AIM on a paper spreadsheet. Let me tell you.
Well, we got AI programs and things like that these days to help.
Exactly, yeah.
But Jeff, we got to keep the show rolling. We've got AJ's pick of the week. We've got our speed round, but we do have your ebook, your free book link in the chat.
Right.
So anybody that's watching can head on over there, put your email in, get a copy of that. They'll probably invite you to the newsletter as well.
Yeah, and I have a full length book which will include the Crocs spreadsheet in it that I give away for free.
Awesome.
Can I tell people my email and they could write to me? If you want to write to me to get the free book and newsletter, write to Jeff at jjjinvesting.biz. That's B-I-Z. So that's Jeff at jjjinvesting.biz. And I'll be happy to send you a free copy of my book and some sample newsletters. And you'll be amazed, just like I'm glad I amazed AJ because he's a smart man. So I take that as a big compliment that he likes my work.
Well, we appreciate you hopping on, Jeff. We'll keep you on in the background in case you want to hop in on
Sure.
any follow-up names. But we do appreciate you checking in. The link to Jeff's stuff is in the chat. Looks like we're getting some love from some of the audience members today. So we'll keep the party going. Thank you, Jeff. We appreciate it.
Thank you for having me. I enjoyed it.
All right, AJ. Leaps. I never really thought you could look that far ahead in options contracts, but that's a new learning for me. And hopefully the audience can take something away and head on over there, get a copy of his book. But let's get back to what we do here at Trading Trainer, and that's utilize your 20 years of experience. And this week you've got a name. Your pick of the week this week is a brand I'm not too familiar with, but it's Kellanova, ticker symbol K.
Yeah, and you are familiar with it. This is the rebranding of Kellogg's, right? So Kellogg's is a bigger company now. It's not just Kellogg's. Kellogg's has things like Morningstar, the vegetarian brand. They've got, I think Cheetos is part of their brand. So Kellanova is this holding company. And I can't take credit for this. I have to give this to the folks from the premium selling program. We have our workshop every Thursday. Yesterday evening, we had our workshop, and man, there was a record number. One of the things we do at our workshop is we open up the mic and we allow people to throw candidates at us. And we go through them and give our 2 cents on each candidate, specifically with our premium selling method in mind. And we wind up picking one of the ones that we think is the lowest hanging fruit for easy returns and low risk that we plan out and give everybody the trade plan for. Well, Kellanova didn't win, but Kellanova was brought to our attention. Let's just take a quick look at it because it's going to require somebody who's a little bit more tuned in with some of the signals, but you can see here that Kellanova is in one of those range bound sideways channels that us premium sellers love. Jeff mentioned that the premium sellers love to sell to those kind of speculators out there, and the speculators wind up letting the options expire worthless, which gives the premium sellers a kickback, a nice income. That's the position that we're looking for. And so you'll notice that Kellogg's gave us a signal up here and then kind of gave us a silly signal just a couple days ago that didn't meet our price targets, which basically means, again, kind of invoking what Jeff was talking about, it's giving us another chance, right, to dollar cost average and buy some more puts, short some more stock, whichever you want to do for your initial covering position. We're going to get a second chance. So the only thing I recommend you do is you wait for your next magenta arrow. What I'm talking about is, if you haven't already, go download the free indicators that we have that you can apply to your trading software. The next time we see this little top form like we did a couple weeks ago, we'll go ahead and do some dollar cost averaging. Again, I'm talking about buying some back month, and we've been talking about leaps, but we're typically talking about 2025, whereas Jeff is, because his investing strategy is on the months and years, whereas ours is more on like the weeks and months. We've been talking a lot about the January 2025. So if you were interested in kind of substituting that shorted stock, which requires a margin count, if you want to do it in your cash account, we can buy some puts. I was looking at the January 2025 $70 put. So I'm going kind of deep in the money so I get more of that intrinsic price action. But now once you've got that put in place, or you've got your shorted stock in place, and we dip down here, down, back to where we have established our line of support, that's when we sell our put premium, buy our calls, and start that income generating engine, if you will. So that's the trade of the week. And I got to give kudos to our premium selling participants. This was one that they presented last week, and it's setting up for another chance for you to get into this. So think about that one. Paper trade it if you're still learning this kind of strategy.
When I first saw the name Kellanova, I thought this must be like a wellness or a skincare company or something. You're telling
I
me
mean, if
Kellogg.
you look at all the brands that Kellogg's has acquired over just the last 5 to 10 years, including a lot of health food brands, a lot of vegetarian brands, you would be, you might think that you're dealing with a health food company. I think Pringles is part of Kellogg's now too.
I mean, they're like the conglomerate, or a great
One of them.
example. Yeah, one of them. Yeah. All
Like
right.
Kellogg's, Kellanova, Nabisco. These are some of the big names that are actually the holding companies behind a lot of these smaller brands that, that's like in the food industry, Sip. That's one of the exit strategies, is that a lot of these small, like organic farms and stuff, they actually go to these trade shows to see if they can't get acquired by these big companies, because the payout is huge.
All right, Kellanova, AJ's pick of the week. Let's move into our speed round. Let's keep it speedy in the speed round, because we've got a few interesting names, and we'll get AJ's take on it. Starting with B in Laguna, California. Interested in a name I'm seeing all over the news today, and that's Paramount Global, ticker symbol PARA.
Well, we are in the beginning here of earnings season. Earnings has already started to happen here. And on April 29th, after market close, we're going to get a earnings release from them. We saw a pop up in price just today on whatever, external news that Sip's talking about. Listen, I wouldn't turn this into a premium trade, at least not just yet. I'd want to follow this a little bit more. And plus, it's not really trading in the range bound range. So we like to see some motion between support and resistance, B. When our support and resistance are too close, that usually tells me that investors are stalled. It means that they're confused, they're uncertain, they're just waiting for something to jump on to either start buying some more or start selling. In other words, it's more likely that this current range bound symbol isn't going to stay range bound for much longer. You could probably structure a earnings play, since earnings is just around the corner. You might be able to take advantage of a volatility rush or crush. my knee-jerk reaction with Paramount right now is to kind of see what earnings does for it. It's your option if you want to try to structure one of those kind of volatility plays on the rush or the crush. But then after that, let it materialize into what it's going to do next, because I don't think it's going to stay here in that $11 range.
And the headline news is Sony in talks to buy Paramount.
Yeah. So
And-
if Paramount's in the news, that's not one we want to sell premium against.
That's correct. Otherwise, it's pretty boring outside of anyone trying to buy them out. All right. Thanks, B. Moving on to our next name. This is Mark in Mesa, Arizona, interested in Energy Fuels, ticker symbol UUUU.
Yep. All right. So this is an interesting play, isn't it? I like that it's really affordable. So it's down in the single digits. Let's take a look at the option chain really quick. I generally, when I'm looking for options, I'm thinking about options I would use as hedges. So I'm typically going 3 to 6 months out with my hedges. So that would put us anywhere from the July to the October range. And I probably, if I have the choice, I want to err to the 6 month side than the 3 month side. So I'd be looking at this September or this October series. I just pulled up the September. It's got some nice healthy liquidity on it. I'm trading every dollar. So if I come on back and I kind of take a little look here, if I was, challenged to use every dollar, I think I could probably put up a nice trade, set up a nice premium trade between the $6 and the $7 marks, with a combination of selling premium at one of those and then buying protection at the other. So I think you're onto something. And not only do I think you're onto something, I see that we're forming a bottom here at $5.75, $6. Let's wait for our signal. Let's not jump the gun here just because we're at this price. Let's make sure we get a reversal signal, whatever you're using to give you an idea that a reversal has been confirmed. And then, if you want to buy some of this stock, let me see if there's a back month option substitute. So I'm going to go out to about January 2025. I can go later than that if I want. Here's the January 2026, but January 2025 for our purposes could probably suffice. I'm trading every dollar here, just about 1, 2, 3, 4, 5. And I could probably either use this $3 or this $2 strike price and get some love there. In fact, I like either one of them. It depends on how much intrinsic versus extrinsic value you want in this thing, but both of them are being traded this $3 a little bit more. So, you could definitely get by with, instead of, spending $5.85, spending $3 and getting kind of something that would establish your initial position. And then as it moves, you'd be able to get back in line there and sell your premium, buy your put protection, and start a whole generation there. And again, I'd probably be focusing based on what we've established as support and resistance recently. I'd be thinking about 6 and 7. However, I just want to give you one red flag, and that is I want you to back test what signals you're going to use for reversals. I've got the fast MACD up here with our free indicator, and I think that it's not fast enough. So play around with your signals and make sure you're responding to the right signal. So use your back testing, and then even test your hypothesis in real-time paper trading, right? I call that forward testing, but I like it.
All right. Energy Fuels. Thank you for that, Mark. And our final name for the day is coming out of Taiwan. This is Sam, interested in your take on Western Digital Corp, ticker symbol WDC.
Oh, wow. Welcome to Taiwan. Thanks for tuning in. That's awesome. Wow. Really responds well, through back testing. The beautiful thing about back testing is you have the, benefit of hindsight. you know where the bottoms were, you know where the tops were, and you can overlay your different signaling strategies and see if your signals got close to the tops and the bottoms, right? And my fast MACD really likes responding to Western Digital, doesn't it? This is more of, and I'm looking at my RSI on steroids down here. This is kind of turning out to be more of like a swing trade type position rather than a premium selling position. You could still sell premium on this, but just realize that your returns on the premium might not be as good as something that's in a range bound sideways channel, but that if you set it up correctly, you'll make money on the back end when you get rid of the initial covering position. And in this case, because it's uptrending, your initial covering position would probably be a long symbol. So I would keep track. This is Sam out in Taiwan. I would keep track of this ascending line of support. And so long as I stick with that line of support and I get my reversal signal, I would think about either going long Western Digital or going long substitute call options, and then just trading it as a swing trade, looking for profits, taking your profits. And I would trade mostly in the up direction. And if I wanted to, I could sell some premium at the top, or I could just liquidate the position. I like it, but I don't, not necessarily for a premium trade, but more for like a leverage directional trade.
Yeah, that's definitely one of the cleaner indicator charts with your indicator that I've seen that we've gone over. I mean, it's really following through on those signals. So,
I think, to be honest, I think that AI, the backbone, I mean, we always hear about NVIDIA and we hear about ARM. Those are two companies that make chips for AI, but I think AI is also, not only is it about processing masses amount of data, it's about storing masses amount of data. And, Western Digital has always focused on old-fashioned hard drives, but that's where a lot of this data will be stored, because that's tried and true strategy, right, is hard drives. So I think that Western Digital is one of those quiet plays, just like NVIDIA is more of the in the face, in your face, in the news play. Western Digital is riding on the coattails of possibly the AI boom.
All right, that concludes our speed round. Thank you, everybody, for throwing those out.
That was awesome.
Want to thank Jeff Weber once again for joining us as our special guest. We'll go ahead and cut that segment out later in this week and post it for everyone to get a recap on AIM investing. If you're tuning in for the first time, thank you for joining us today. We appreciate it. Feel free to show some love. Hit that like, hit that follow, hit that subscribe button. We've thrown out a number of links in the chat, whether it's the daily workshop or AJ's indicators that you may have seen on some of the charts. Head on over there, sign up. You'll get access to some other stuff. If you're interested in AJ's mentorship program, we've still got that cruising along.
Absolutely.
We've got AJ's weekly mastermind call or mastermind group. So if that's something you're interested in, reach out to us and we'll get you some more information on that. Today is options expiration. Any final thoughts, AJ, heading into the weekend, heading into next week? What should we be keeping an eye on?
Well, first of all, I do want to thank Jeff again. I mean, he's taken AIM, which was actually a fairly straightforward strategy made before a lot of the investment vehicles, and he's really put it on steroids, using the newer investment vehicles and coming up with some ancillary strategies that go along and really complement AIM well. So I want to give Jeff a heads up. If you get a chance, check out his newsletter, check out his ebooks. So I'm so thankful that he was on our show. That's a great, long-term investing strategy. April options are expiring. I'm watching where that S&P reverses, but at this moment, unless the S&P dips even lower and out of that magenta zone that we showed in the beginning of the show, I'm still bullish, folks. And so I'm still looking for these various trades, but I'm not dumb. just like with our VIX trade, I'm hedged. And so you should be hedged too. We're looking at now selling May premium, and we're going from there, SIP. Just business as usual.
Business as usual. If the markets go up, we got a strategy. If the markets go down, we got a strategy. If the markets go sideways, we've got a strategy.
We got the best strategy.
That's why AJ's been doing this for over 20 years. That's why Trading Trainer is the best in the business. And if you haven't gotten in tune, you should be getting in tune, because we're not going anywhere. So thank you, AJ. Thank you, Jeff. Thank you, everyone, for tuning in. That's going to be a wrap on today's show. Hit that like, hit that follow, hit that subscribe button, and we'll get back to you next week. Thank you, everyone. We'll see you next week.
Take care, everybody.
Thank you for tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to tradingtrainer.com and create your free account today. And if you're not already a subscriber to the show, hit that subscribe button and we'll get you fresh content